Warren Buffett just said something that should make every American pause. So according to him, the US dollar, quote, going to hell. And this isn't coming from just anyone. This is coming from a man who's sitting on $348 billion in cash. Yeah, that's with a B, friends. One of the most successful investors of all time, and someone who made a career out of playing the long game. So if Warren Buffett is worried about the dollar losing value, what does that mean for home prices, for mortgage prices, for the future of real estate? Because here's the truth. When the value of the dollar drops, it impacts everything from how much house you can afford to what your home will be worth 5 years from now. So should you be worried about what's sitting in your savings account or how inflation could quietly chip away at your purchasing power? And more importantly, what can you do right now, today, to protect your wealth? Well, today we're going to be breaking it down from a real estate perspective, and I'll share with you what moves smart homeowners and investors are making right now to stay ahead of the game. So let's jump in. Now, before we continue, let's take a step back and put things into perspective. Buffett made those comments during a shareholder meeting earlier this year, and he said, I quote, "We wouldn't want to be owning anything that we thought was in a currency that was really going to hell." Now, during that, he was referring to the US dollar and the growing concern about its long-term value. So what's behind the worry? Well, here's a short version of it. Massive government spending, proposed tax cuts, rising national debt, and a downgrade in the country's credit rating. In fact, on that topic, Moody downgraded the US credit rating from a AAA down to a AA1. That's a big deal. And if that wasn't enough, the US dollar index, which measures its strength against other currencies, has dropped over 8% since the start of this year. So in plain English, your cash is quietly losing value. Now, you might be thinking, okay, well, I'm not Warren Buffett. I'm not sitting on billions. Well, that's a fair thing to say. But this still hits home, especially if you're saving for a house, trying to build wealth, or just trying to make smart financial decisions in a changing market. All right, let's break that down. So if your savings are in cash, that money is buying you less and less every year. If your investments are in the stock market, well, you've probably felt the volatility, the big swings, the big losses, and a whole lot of uncertainty, especially recently with all the tariffs. And if you're sitting on the sidelines hoping for things will someday go back to normal, well, that might not happen anytime soon. So now the big question is this: what assets actually protect you when the dollar is under pressure? Well, that's where real estate comes in. Historically, real estate has been one of the most reliable hedges against inflation and currency devaluation. And here's why. Well, first, it's a hard asset. You can't print more land or homes. Unlike cash, it holds intrinsic value. It's leverageable, so you can borrow it at a fixed rate, and if the dollar weakens, you're repaying that loan in cheaper dollars. It appreciates over time, so even during periods of inflation, well-located properties tend to rise in value, or at least hold their ground. And here's something else people forget. Rental income adjusts. As prices rise, so does rent. If you own investment property, you're more protected than most. And if you caught our recent video, you already know this summer is really shaping up to be a rare moment for buyers. Inventory is rising, price cuts are increasing, and motivated sellers are making deals, concessions, and the list goes on. That means real estate isn't just a hedge right now, it's also an opportunity. So no, this doesn't mean you go buying the first property that you see, but it does mean sitting on cash while the dollar loses value is not a long-term plan. Real estate, especially in high demand areas, remain one of the few assets that offer income, appreciation, and protection all wrapped up in one. So what should you do? Well, here are 3 moves to consider, even if you're not ready to buy tomorrow. 1, evaluate your cash holdings. If most of your savings are sitting in a checking account earning 1%, you're losing money to inflation. It's time to rethink where that money's parked. Next, get educated on real estate opportunities. So whether you're buying your first home, picking up a rental, or even looking at alternative options like rents or fractional ownership, the goal is to get your money working for you. And then 3, lock in fixed rate. If you can buy now or refinance, locking in a fixed mortgage in today's market could mean you're paying tomorrow with cheaper dollars. Remember, Buffett isn't hoarding cash out of fear. He's doing it because he's looking for the right place to move when the time is right. You should be thinking the same way. Warren Buffett, he sees things coming. And when the man who never panics raises a red flag, it might be time to pay attention. The US dollar may be slipping, but you don't have to sit back and watch your wealth erode. Real estate has always been a shelter in the storm. And if you're ready to explore your options or just want to talk about making smart financial moves in the market, let's talk. I'm here to help. But friends, well, that's going to wrap up this video. I hope you found some value with this. If you did, hit that like button, subscribe, and hit the bell for notifications so therefore you don't miss any future videos. With that said, I'm going to be shutting off the cameras, and I will see you in the next video.